I'm Priscilla Barrera with the Investing News Network, and here with me today is John Kaiser of Kaiser Research. John, thank you so much for being with us today.
It's a pleasure, Priscilla.
All right, so we're here at Sprott once again. We're in Vancouver. What have you seen in terms of sentiment toward the exploration sector this year compared to last year?
Well, this year people have seen gold break through $1,400. There's still massive skepticism that it has any sort of sustainability to this uptrend, but a stronger gold price at this stage, given the darkening outlook for the macroeconomic picture with trade wars and all that sort of stuff, this is giving people hope that we're in the middle of a turn. And compared to last year, there wasn't really a sense of this happening. The hope from 2016, when things looked like when gold had run to almost 1,400 and the markets turned around, that fizzled. Last year it became apparent nothing was happening. This year was even worse than last year, but since June, when gold started moving up, there is now a flicker of hope, but it is by no means a pile-on type of situation. The smart money, they're starting to sense this gold trend has legs to it. We're at the beginning of a big cycle, and they're starting to look for deals and things like that, but the general public does not yet believe it.
All right, and you're mentioning gold prices. We've seen some volatility on prices after the Fed decision yesterday, but prior to that, as you said, we've seen the uptick in prices. What do you expect to see yourself in terms of gold prices for the rest of 2019?
I think these sort of local volatility is missing the big picture. So they only cut a quarter point, and then they signal we're not going to cut more. And the gold people want to see the interest rates go back down to nothing, because that makes gold more competitive to own if your debt instruments aren't yielding anything. So then they sell gold off. But I think what's really happening is that this big problem that was scheduled for 2030, where China's GDP matches that of the US, and it becomes a question of sharing the balance of power. During the Obama administration, the whole focus was, okay, how can we have China become sort of like us, and we have globalized free trade, and we're all working together. In the last few years, China's leadership has gone more towards the totalitarian model of authoritarian and wall off everybody behind this firewall of the internet censorship. And so the chance of China becoming like the Western world has diminished. And Trump sort of picked up on this and he's accelerating the showdown, because it's clear that China wants to eclipse America, displace it. So all the sort of protectionism, trade wars and stuff like that, it's moving away from that original vision. And because Trump has chosen a policy of making enemies out of almost everybody, there is this concern that they're prematurely abdicating their leadership role in the world. And that means there's going to be a period of uncertainty coming, and everybody's now angry about how the US dollar is being used to bully the countries into not dealing with Iran's decisions that are made unilaterally by the United States. And gold is a kind of intermediary asset class. And I think we're in the early stages of seeing a massive repricing of gold into the $2,000 to $3,000 range. And it's similar to the 70s, when gold went from 35 to 850 and stabilized at 400. What we saw in 2003 to 2011, that was actually a catch-up, an inflation catch-up, because $400 gold in 1980, where it stabilized, is $1,251 today in inflation adjustment terms, which is where we've been hovering. So it's been like not very meaningful. Looks good, but all the gold in the ground is high-hanging fruit, not like the low-hanging fruit. So we're at the really big picture is when this starts to happen, all the owners of the 6 billion ounces of gold, they're not going to sell, and there'll be new capital coming in wanting the security of gold ownership. And the mining industry can't crank up its 90 million output supply overnight. That's going to take 5-7 years to do. So this local stuff, that's a red herring. One needs to look at the big picture. I think we're going to see gold start going through 1,600, and then the big test will be 2,000. The public won't really come in until they see gold successfully challenge $2,000.
All right, so in this current price environment, or as we move to that price environment, how does that impact your investment strategies? What would you say to investors? What should be their right approach?
So my focus in the last 3 or 4 years has been, okay, gold's not going anywhere. It's going to be stable at $12.50 plus or minus $100. So the optionality plays, the ounces in the ground, they're not worth very much. But until gold develops an uptrend, they're just going to sit there and maybe get acquired cheap by some bigger company that's doing asset gathering type of thing. So with discovery exploration, the point is to find something that works at the metal prices we have. And in terms of copper and stuff like that too, the super cycle's over, everything's reasonably stable. So you want to find a great copper deposit, it has to have the right grade and tonnage. But now, as I'm seeing a gold uptrend come, it has two implications. One, for the discovery exploration juniors, it will lower the bar for what counts as a meaningful discovery that deserves more money to come in. And the point I made earlier about high-hanging fruit, the big thing about 1980, when gold ran from 35 to 400, inflation adjusted, it should have been just $77 during that period of inflation, but it was 400, and that was a 400% real gain, and it made a lot of low-hanging fruit. That period, 80s and 90s, was fantastic for discovery exploration while gold was stuck in a 20-year bear market. But now, 2.8 billion ounces have been added to the 3.2 billion that existed in 1980. That's 6 billion ounces there. But what's left in the ground is high-hanging fruit. So opening up and being able to wander down the cutoff grade, that's important. And for the optionality plays, once gold is an uptrend, the leverage is extraordinary because some 20-cent stock that's there because the ounces are worth zero. Well, a gold move to $1,600 for even something like Midas Gold makes a massive difference. It goes from being a 60, 70-cent stock that's there just as an optionality valuation to being a potential $4, $6 stock. Start talking $2,000, $3,000, and the potential gains are astonishing. So now I'm shifting back to, okay, you need to have a blend of juniors in your portfolio, optionality, gold plays, ounces in the ground where maybe they can do some exploration and find something better, but also good solid exploration plays that have the potential to deliver a big meaningful discovery that also benefits from people seeing gold go up and want to come into the market and participate.
All right, and I remember when we spoke at PDAC, one of the big trends in the sector was the Megamergers. Do you think that the M&A season is over? And if so, what will be the next big trend in the space?
I think we're running out of things to be acquired, and the big guys are doing their cross mergers. We saw Newmont absorb Goldcorp, so there's no more Goldcorp to acquire anything. The Agnico Eagles and Kinross, they're being very prudent. They're preferring to develop assets directly. The Barrick Newmont Nevada Gold Mines JV, I think that's a very significant thing. But right now it's buried inside these two companies, 68.5%, 62.5% and 38.5%. But if they were to spin that out as a independent company, dividend in specie, the stock to their shareholders pro rata, and then you have an all-American gold mining champion, and Nevada is one of the greatest places out there, then others will come in, the Agnico Eagles, and that will wake up and they'll look at Nevada. And we're already seeing companies like Oceana Gold, Hochschild, Coeur, they're all in Nevada starting to do deals. The deals are still generally quite weak, but I expect more sort of farm-in activity and interest to emerge when the gold uptrend happens in terms of money going into the lifestyle juniors which then option projects and that. We're probably at least 6 months away from that happening, and that assumes gold does develop an uptrend. So no really big M&A activity at this stage. The good stuff's already been cleaned out by others, and at the upper levels, there's not that much left to merge.
Right, and moving away from gold a little bit, are there any commodities you don't like in 2019?
Well, the battery metals are having a rough go. Cobalt's back to where it started. Vanadium not quite back to where it started, but substantially down from its peak. Lithium is failing precisely because the mining industry does what it's good at. All this new supply coming out of Australia from the pegmatite bedrock deposits, and then of course the Chileans expanding their quota so you get more lithium from the brine. And the electric vehicle mania, well, the mania is probably a bit ahead of the reality, so we're not quite seeing that grow as fast. So the battery metals I'm relatively cool on, and nickel continues to be a problem. Copper seems to be sort of stable. If you listen to like a Robert Freeland talk, well, it's all about this wired transportation industry down the road. But until that actually happens, there's still plenty of copper available. And the cloud hanging over these base metals is that will this trade war and global military conflicts, say, in Iran, get some mess going over there, will it tip the global economy into a downturn? And that kills the demand side of the equation while the supply side is still strong. So gold is the sort of commodity that I'm most keen about right now.
All right, my last question for you today, John. What are you seeing in terms of money coming back into the sector? Financing, what are you seeing in 2019?
2019 has been horrible. I track the financing activity on the venture exchange. There's about 1,200 juniors listed there that are in the resource sector. In terms of traded market value, that's been $10 million to $20 million a day compared to 80 million plus for all the other stuff, the cannabis and so on. But we're starting to see a change happening. The cannabis bubble seems to finally have reached that downside of the bubble curve. Gold is causing people to start looking at the better, more advanced juniors. We had one day a few weeks ago where Victoria Gold had one large buyer in there, and then it sparked surge value traded to $40 million for the day. And I checked, and it was actually distributed amongst a large group of companies. It wasn't like when Atlantic Gold got the buyout offer from St. Barbara for $800 million or so, and it went up and all the arbitrages were trading that. So we're seeing this come in. It's pulled back a bit now, but in financing activity, February only $50 million raised by TSX venture-listed resource juniors. June was horrible too, $70 million. But on the plus side, we saw that somebody, Oring, pulled together the statistics that Eric Sprott in June and July went on a private placement binge, and they added up and they said he's bought $139 million. So he's almost single-handedly walked into the market and said, I think gold is at the beginning of a sustained run, and I have my favorites, and I'm now putting down hard money. And he sort of did that with the uranium bubble in 2004, and everybody thought he was nuts, and it turned out that he was completely right. So financing activity, very muted. It means not much money in the discovery exploration, juniors raised, so not a lot of results flow happening. Personally, I think we're completely at the mercy of gold developing a meaningful uptrend to pull us out of this mess. But the cannabis stuff, it's starting to fizz. The smart money's exiting. They're piling it up. They're looking for the next sector. They see the reason for gold, this idea of premature global chaos and forfeiture of the leadership role by the United States, and an interregnum of everybody pushing and shoving, and as just a easy narrative for everybody to understand. And you're starting to see, even in the gold bug sector, traditionally it's sort of more the conservative, libertarian, right-wing people who are gold bugs. But now you're seeing people like Sam Zell and Ray Dalio, the billionaires, who are actually liberals, coming out and saying gold is headed for an uptrend. And that's because they're watching the status quo that they've taken for granted being dismantled almost day by day. And so at some point you're going to have the entire political spectrum focused on gold and buying it, and that is what could get you that $3,000 in real price, because there's no inflation in the system now. Doubling in gold, a real doubling at this stage, would have massive implications for the juniors.
All right, John, thank you so much for joining us today.
You're welcome.
Once again, I'm Priscilla Barrera with the Investing News Network, and here with me today is John Kaiser of Kaiser Research.